Welcome, fellow Forex traders. I'm not sure what I'm going to call this yet, but it's our first episode of maybe the, the Canvas to FX Roundup, something like that. I'm trying out a different format, excuse me, instead of just blogging all the time, do some video stuff that might be more efficient for my time and get more detailed, better content out to you. Let's get right into it. I'm going to try to keep this a little bit short, do maybe a longer, extended version for a weekly kind of roundup or something like that. So if you like this format, hit me up in the comments, tweet me, email me, whatever. Let me know, and hopefully I can continue doing them. So let's get into it here. Let's just looking at the major indices first. S&P 500, obviously it's been a crazy couple weeks. We came down right through the 200-day moving average, popped back up, came back down again. This line here is the close from the last trading day of 2017. So you can see we dipped below that, went negative on the S&P 500 yesterday for 2018. Kind of a big deal. I had some friends calling a bounce there, smart play, good if you're an intraday trader. I did not. I've been in cash, 100% cash for, since the 18th, I think it has been. So I'm just kind of on the sidelines observing things, trading FX primarily. But a big deal here, under the 200-day, and you can see similar looks in the NASDAQ here, also under the 200-day moving average. Quite a ways from the yearly gains here yet. So this is the close from the last trading day of 2017, December 29th. So quite a ways, still pretty positive here in the NASDAQ. The Russell 2000 is a very different story. Very negative on the year. I don't know about very negative, but definitely below that close of 2017, negative territory, well under the 200-day moving average. I highlighted this the other day. You're seeing the 50-day simple moving average crossing the 100. They're both pointing down, coming towards that 200. The last time we saw that was way back here in 2015, and we had some serious volatility, momentum to the downside. I'm expecting something similar, and let's get into a little more why. First, big one for me, I haven't seen any real spike in volatility, the VIX here. You see, earlier in the year, February, we were way up, almost in the 50 range here, and we haven't crested that yet. That's telling me there's still a lot of complacency in this market, and it's, people aren't taking it seriously. You've got a lot going on. Trump is going off on the Fed, saying they're raising rates too quickly. You've got trade war stuff. You've got midterm elections. You've got valuations that are just skyrocketed through the roof, and people have been buying the dip for 3, 5, 10 years now, and they don't know anything different. I like this tweet from Joe Fahmy. This was yesterday, looking at the put-call ratio of 0.71, and he says, "Are you freaking kidding me? There's not enough fear out there." So that's telling me there's got to be more downside coming. And then you saw, Amazon reported earnings today, whiffed, Google whiffed, both trading down after hours pretty significantly. And I haven't looked at it yet, but I know the market's down, futures are down, so we're probably going to have a rough day tomorrow. Yeah, Amazon giving up all of its gains today. Google, similar story. Almost everything it gained today. So it's going to be ugly tomorrow, I would assume. We'll see what plays out, but I'm not expecting a green day at all. So where does that leave us in terms of FX? What's been working? First, I've been trading the euro and the sterling pretty consistently. These two pairs have been working extremely well. You can see here, sterling broke. I've been blogging about this. Daily trend line support here. And very predictable, coming down, breaking down, boom, hitting this low. Beautiful target, rejected from that low again, hitting these lows here in the 128 area, and now it's trying to stage a bounce. You've got a similar look here in euro. Once it came through, this line here, 114.32, had a touch, almost touch here, missed a little bit, but to me that's a touch. Boom, right back down, came back up, kissed this line. I missed this sell today. I was planning to sell here. Second guessed myself, missed it completely, and it happened fast. If you didn't have limit orders in there and you weren't around, you probably missed this move. It was a quick, complete 180. Came down and testing these lows now. I wouldn't touch this for a short right now. I'm not going to trade against the trend either. I just feel like Euro and the Sterling, they have gone pretty far, pretty fast, and I wouldn't be surprised if we see, some kind of bounce, especially Sterling could bounce up here pretty easily. This trend line's in play. These lows are in play. So I think the easy money in these pairs has been made, and you're better off waiting for, a cleaner setup, less risk type thing. So I'm looking at the dollar-yen, and for a number of reasons. First, you've got this is the daily chart here. You've got this trend channel that just is starting to look weak. Yes, you've got the moving averages pointing higher, curling up the 200-day here. Everything looks beautiful in terms of a trend, but it's just screaming weakness to me. You had this rejection here, the 114, almost 50 area, and that's just been rejected so many times. I would have preferred seeing a move up to the top of this trend channel, coming down here for support, maybe another move here up, but that's not what happened. And dollar-yen is a risk currency. It's a risk-on, risk-off pair, right? Flight to safety with the yen being a safe haven. What's really bothering me is we haven't seen a dump in dollar-yen as the market has been selling off. And that tells me there's an opportunity here. If you think equities are going to continue showing weakness, you should be shorting the dollar-yen. There's just this bear flag that's been developing here after this move lower, and it can't get off the mat. It can't get off this trend line, this blue trend line. It can't get above the 200-day here, or the 200 moving average is a 4-hour chart. The 100-bar moving average is coming down, kind of closing in on price. It's really just clamping it in there, and there's going to be a move here, and I feel like it's going to be to the downside. Obviously, I could be wrong, but I am currently short from about 112.60. I was short yesterday from 112.55. I thought this breakdown was going to be it. Came back up. I had to take the trade off this morning for only a slight profit. It was a little bit frustrating, but I waited patiently, re-entered, and I think we should see another move down. I don't know if it's going to start tomorrow. I don't know if it's going to be next week, but I feel like the odds are in your favor for a move down. You could put stop loss, 112.85 if you want, a little bit higher if you want, even tighter if you want here at 112.70. Anywhere in here, it's a great risk reward. And let's just look at why for a quick second. If you do a fib extension from high, low there to low there, the 100% you're seeing coming here is about, it says 109.96. Let's call it 110, right? Pop this out to the daily chart and check out this level. Let me blow this up a little bit. 110, you're talking about the 200-day moving average right here, exactly comes in. You see it right here when I'm over here. It's 109.83 right now, and it's essentially trading sideways. So we come down, that's going to be right there in that kind of area. Then this blue trend line you have here, that goes back. Let me make this easier to see. That goes back all the way to December 2016. You've got this touch, this pops through, kind of tests it in this area, pops back up. I wouldn't be surprised. You've got this confluence of support here, and it just seems like a logical target if you're short dollar-yen to see this thing come down and test that again. Will we bounce there? Will we find support there? Probably would be my guess. Will it hold long term? I have no idea, no clue. But if you are looking for a place to, get long equities, I would keep an eye on dollar-yen. It's as realization that this is real. The sell-off is not just another small dip. There's got to be some panic that comes through in the dollar-yen. You see some yen buying. So that's where I'm positioned right now. I think it's kind of the best setup risk-reward. For from everything else I'm looking at. I'm not going to go through a bunch of other pairs right now because, like I said, I'm trying to keep this short. But that's where my head's at right now. That's what I'm positioning in. I know tomorrow's Friday. I don't like putting on new positions on Friday. Going into the weekend and then, messy trading on Sunday, it's not a whole lot of action. But tomorrow could be interesting, and I'm already in this trade, and we'll see where it leads us. So I hope you enjoyed the video. Again, let me know in the comments, email, tweet me. I'm currently CryptoCanvassed on Twitter, and hopefully we'll be doing more of these videos. Take care again.